Hello, everyone. Last night we had a big event. Iran was attacked by Israel. It's a sad news because wars are never good. Innocent lives are lost. And it also impacts global economy. It affects the demand of the world. It also affects the stock market. In this video, I'll explain you what exactly happened, what are expected repercussions of the attack, and what should investors be doing. Talking about the attack, was market expecting this kind of attack from Israel to Iran? The answer is no. The global markets have been going up, and we have seen phenomenal rally in the last 2 months since April 7. So market was really not expecting this kind of attack. Yesterday, there were some rumblings in the media, in the Twitter, that something is playing out, that Iran may get attacked, but no one was expecting that it may happen in the night. Yesterday, Indian markets saw some correction. The Nifty was down 1%, Nifty 500 was down 1.5%. When US markets opened in the evening, they were positive. But later in the night, when attack happened, the futures of the US markets went 1.5% down. Also, because of this attack, the other commodities have been affected. The crude has gone up by 10%. The Brent crude has now hit $75. Gold has gone up as a safe haven of 1.5%. And today, as we speak, Indian markets have opened and they are down around 1.5%. So definitely there are repercussions of this. So let me tell you what exactly happened and what we are expecting. The attack which was done by Israel was done on the nuclear facilities of Iran. And during the attack, the deputy chief of the defense of Iran also died. We are now expecting that Iran will retaliate. When it will do, how much will be the impact, we really don't know. But seems like Iran will retaliate on this for sure. Now, according to me, this war or this attack or the tension between Iran and Israel is not normal. It's not like Ukraine or Palestine crisis, because Iran happens to be the fifth largest producer of oil in the world. And oil is an important commodity. Any supply change or any disturbance in the oil supply definitely affects the global economy. So I think if the crisis goes for long, it's not good for anyone. The best case scenario may be that there can be a small retaliatory attack by Iran, and then there is some kind of settlement. Generally, historically, whenever there has been these kind of global tensions, the markets have reacted negatively. The reactions are generally sharp in the initial few days, and then there's a good recovery in the following weeks. So I think next few days are going to be critical. Thankfully, we are entering a weekend, so by Saturday, Sunday, a lot of the crisis should get resolved. So this is what is seems like going to happen in next few days. But what is important is we need to understand the India perspective. Now, for India, I think this is not a good situation, because as a country, we consume a lot and there is a huge demand of oil. And since we don't produce oil, we import a lot of oil. So our oil bill is huge. So let me explain you what is going to be the impact if the oil price stays high. As per historical data, generally a $10 increase in Brent crude prices affects our current account deficit by 0.5%. Now, current account deficit is the gap between what we import and what we export. Generally, we need more dollars because we import much more than what we export. And if the current account deficit goes up, it's not good for Indian rupee. So Indian rupee is expected to weaken by this. The second impact will be on fiscal deficit. Fiscal deficit is what the Indian government earned and what it spends. The government ends up spending much more than what it earns. So fiscal deficit is always high. If crude price stays high, the fiscal deficit will further go up, because the government's revenue, which comes from oil GST, will come down. So if fiscal deficit goes up, the interest rates will also stay high on the long end of the yield curve. The third impact will be on the inflation. because the goods will become expensive, especially which are dependent on petroleum. And if inflation stays high, the demand will be low and RBI is not going to cut further rates. So definitely there will be an impact, and the Indian economy will slow down along with the global economy. Talking about markets, markets generally behave negatively for first few days whenever the attack happens. And if there's a negotiation, if there's some kind of settlement, then markets will bounce back. So it's definitely going to impact. The best case scenario is that the settlement happens and it doesn't stays for long. Now, talking about what should investors be doing. One, there will be volatility and it's a natural part of the stock market. And the good news is that investors have seen this kind of crisis many times in the last few years. COVID, we have seen when we saw the volatility, we have seen the Russia-Ukraine war, we have seen the Israel-Palestine war, we have seen India-Pakistan crisis, and this is one more crisis, and we know how markets behave. There'll be some volatility, and it generally bounces back. So the most important action is investors, please don't panic because markets have already, started correcting. Please don't sell. Market falls out of panic, because if you will start selling, whatever loss you have right now, it's notional, it will become real. And second, what investors need to do is that you need to, if market falls meaningfully, if there's a buying opportunity, you can also take advantage of buying, and hopefully it will all bounce back. There are sector specific expectations also. Some sectors may be affected more and some sectors may benefit out of it. The sectors which are expected to be hit are petroleum related, like airlines, tire, paint, because the input product in this is oil, and if oil goes up, the cost of production will go up. It will hit the margins. The sector which are expected to benefit is IT and pharma, because if rupee weakens, generally these sectors do well, and they're also defensive sector also. Gold may also continue to do well, because whenever there is uncertainty, gold does well. So yes, volatility is there. Watch the markets carefully, take rational decisions, and if there's an opportunity, take advantage. Thank you.